All right. Yes, we are live here on our webinar platform and also on our YouTube channel on SME Banking TV. Sorry for this late start. We were waiting for our second speaker who has technical problems to connect with us. And yes, we finally have him. Max, if you can check now your camera and microphone. And and we will start the webinar. So today we will discuss the topic of the customer centricity in the wealth management. So of course we all noticed that there was a radical shift in the customer needs and expectations recently, and we'd like to discuss today what does personalization mean in the wealth management, how to create value and drive customer loyalty nowadays, and what does digitalization bring to wealth management. And my guests today are Sławomir Wójcik, product manager at Comarch Wealth Management from Poland, and Maximilian Clary, which we hope join us later, head of private banking and wealth management from Erste Bank, Austria.
Good afternoon. Pleasure to be here.
Welcome. Before we go to the presentations, very short organizational information from my side. So we start from the presentations, but you can type your questions right now in the chat, and we will be happy to answer them during the second part of the webinar. Yes, we are recording this webinar, so right after we finish, you will receive the link to the video and presentations as well. So I think we can start. I will host today's session. Max, let's check whether are you with us? Can you hear?
Yes, I'm there. Hello, can you hear me?
Great. Yes, we can hear you. So let's start.
Sorry for the technical problem, so it took me a little bit longer.
Yeah, we're glad you are with us. So let's start with the presentation. Sławomir, I'm passing microphone to you. Let's start with your part, and then Maximilian, you, and then let's discuss. You're welcome.
Okay, thank you very much for the introduction myself. I hope you can see my presentation.
Yes, all works.
Okay, let me check once more. Yeah, once again. Okay, great. Good afternoon once again. Thank you, Anna, for the introduction. As a product manager of Comarch Wealth Management for over 10 years, I have been supporting all our implementations of the product in different regions, in Europe, in the Middle East, and in Asia. And as you can imagine, different clients, different institutions had different requirements regarding our products. From one hand, for example, delivering the robust investment report for the customers, standardization of advisory process or activation of customer channels. But all that requirements have in common the same things. To improve the customer, to improve the work of relationship managers, to improve the interactions between the relationship managers and the customers, but also to better meet the customer needs, to the customer preferences. And today I would like to share with you a few examples how to improve such kind of activities. But it won't be any random examples. It will be examples which will be touching some particular stages of the customer life cycle, of the customer lifetime. So let's focus at the very beginning on that customer life cycle. So in different sources, you can find different informations about the stages of the customer lifetime. It could be stages, it could be 3 stages, 4 stages. In my presentation, I will introduce 5. The stage number one is the stage of reaching the customer. So the stage in which the banks, the financial institutions need to search the clients, to focus on the target group, to address the right customers, which will to find the right customers to which they can address their products. Then we have the stage number two, the stage of acquisition, which is all about attracting, acquiring, and onboarding the customers. Then we have the stage number three, which is about the engagement and activation of the customer, engaging in the first purchase. And then we have the stage number four, the stage of retention, is the stage in which the customer starting buying our products on regular basis. And the stage number five, the loyalty stage, the stage in which the customer becomes our loyalty partners, the stage in which the customer trust us and we trust each other in the whole business cycle. And it doesn't matter if we have 3 stages of the whole cycle, 4 or 5. The most critical distinction is what happens, what kind of activities banks are doing before they acquire the customer and what they are doing after. And it's not, of course, a secret that most of the organizations, most of the institutions are focusing on what is doing before. And that's why today I would like to focus on what kind of activities should be done after. And this is the one reason. And the second one, because it's really worth to do that. So let's see a few facts. First, the cost of customer acquisition. That's, I believe, the obvious thing, that the cost of attracting new customers are 5 times higher than the keeping existing customers, especially when we take into account that the whole customer lifetime and the 2 stages which I have mentioned before, the reaching and the acquiring the customer, which is definitely much higher than focusing on the existing customers which we already have in our database. So that's fact number 1. Fact number 2, probability of selling the products to the existing customers, as you see, is more or less 60-70% in comparison to the probability of selling the products to the new prospects, which is not higher than the 20%. So definitely when we take into account all information that we have about our existing customers, the history of transactions, the history of his activities, and the personal information, definitely it's much easier to reach such kind of customers. And of course, that increases the probability of selling the products. And the fact number 3, which maybe you will be surprised a little bit, that just increase the customer retention by 5% can lead to the 75% higher probability, profitability, of the companies. So the conclusion is that your customer become more valuable and profitable over time. So definitely it's worth to focus on the engagement, on the retention and loyalty stages. And it's even easier when the wealth comes into the game, because it usually works like that before the customer becomes the wealth customer, new to wealth customer, he first need to be new to bank. He first need to be the bank customer. So that's why the stages of reaching the customer acquisition and the first engagement, in fact, is done earlier. And then with the wealth customer, we could focus on the engagement stage and retention and loyalty, which of course naturally will increase the customer lifetime. But the customer lifetime is not the only one piece of the whole puzzle, because at the end, what really is important is the customer lifetime value. And the formula for a CLV is quite easy, because of course one key factor, as I have mentioned, is the customer lifetime. But we still have another two. The second one is the frequency of buying the products, and of course the value of the particular single purchase, which at the end, of course, will lead to the customer lifetime value, which of course has the natural impact of on the bank and the institution profitability. And the question is how to increase that particular factors and how to increase at the end the customer lifetime value. So let me share some examples step by step. So first one, investment value. So we can increase that with the assisted advice. So we can imagine that once we have the advisor which can deliver to the client the right investment information based on his preferences, based on the customer risk appetite. So it definitely will lead to the higher probability of buying the products. The second similar process, of course, can be delivered to the customer in the self-service channel, including robo-advisory. But also some kind of hybrid approach in which such kind of advice can be some kind of combination of self-service and the personalized advice. And the last element in that group, I would like to underline here access to the product universe, because I believe it's obvious thing that once the universe of the products will be broader, it increases the probability that the customer will find here the products which better meets his expectations and the preferences. And that was the factor number one. Number two, frequency. So the natural way to increase the frequency of buying the products is delivering or introducing to customer periodic investment plans, which of course help of regular basis to invest money on monthly, quarterly, or yearly. Then personalized investment ideas, any kind of concept of new products, new investment plans, which can be delivered to the customer on regular basis. And of course, periodic rebalancing, which natural will lead to the more frequent transactions of buying or selling the product. And the last factor, what I have mentioned, is the customer lifetime. So the natural element how to increase the customer lifetime is to introduce the robust financial planning, which address different stages of the customer life, together with investment goals, which are focusing, which can be different types of. I mean, it can be goal which focus on children education or pension, or just building wealth. So that's definitely something which help to engage the customer more and more and increase the customer lifetime. And the last thing, which probably you'll be surprised a little bit, is the gamification and loyalty, which is, let's say, nothing new in the business and nothing new in let's say, traditional banking. But I think from the wealth management perspective, it's something rather not so common. Different types of loyalty plans and gamification, which I will introduce a little bit more in the few seconds. And all that can be supported with concept of personalized videos, a very interactive and personalized video, which deliver different types of content to the customer. And these three elements, and let me focus on these three examples, as you have here, the personalized investment ideas, the gamification, and the personalized videos. So example number one, investment ideas, personalized investment ideas. The concept of this idea is, we could say, it's quite similar to any type of product campaigns, in which in the first step we need to prepare what kind of product or what kind of investment plan you would like to address to the customer, delivering with different information about that offer, some descriptions, some videos, some charts, some pictures and so on. Then the stage number 2, in which thanks to the role-based engine, based on different types of filters, which can filter the clients from the database based on, for example, information about the customer free cash, about information how much assets will mature in the following periods, 2 weeks, 1 month, 6 months, and so on. What is the customer trading activity, or how much assets the customer has in the particular group of products, or in a single product, or in assets class, and so on. So based on such kind of filters, the system can filter, of course, only narrow group of the customers to whom that investment idea will be sent, and that, of course, will increase the probability that the customer will buy that product. And of course, such information can be delivered to the client in different ways, at least in the mobile channel, in which the customer can receive notification that some kind of investment idea is waiting for him, and he can review and decide if you'd like to invest in that product or not. And that was example number 1. And example number 2, let me introduce you the gamification. So I would like to present you the case study of Old Mutual Company, which is the investment and saving and insurance group. And that institution would like to introduce to their customers Old Mutual rewards program. So as you can imagine, such kind of program, of course, has two elements. So the first one is different ways of earning the points based off education activities, or based on information how the customer, how often the customer is buying the products, or any different activities which helps the customer to earn the points. And of course, from the other hand, information how such points can be spent by the customer. So the customer can use such points to invest in Old Mutual products, or buy some products and spend them and rewards partner, or donate the charities. And all that are in line with one of the key strategic pillars of Old Mutual Company, to be customers' most trusted partner, and passionate about helping them achieve their lifetime financial goals. And that was example number 2. And let me share the last example, the example of the personalized video, which in general concept is quite easy to understand, because in that concept, the system is delivering a very personalized video to the client in different channels. The personalized means that in that video, the customer receives personalized information about himself, his name, information about his cash, his portfolio of products, and so on and so on. And let me share one example.
Yeah, we can't hear the sound, Sławomir, of this video.
Sorry?
We cannot hear the sound of this.
Oh no.
Maybe once.
Yeah. I need to. I was pretty sure that I was. Okay, let me stop it once again. Oh. Mm-hmm. Okay, let's try once again.
John, hello. Great to see you back. I'm very happy to tell you what has changed in your portfolio since your last visit. Your wealth has significantly increased over the last year. You can also expect a coupon payment in the upcoming quarter. Check the KPIs on your dashboard. Just to remind you, For more granular portfolio overview, visit a dedicated space which showcases analysis of your wealth. This allows you to see your current exposition in currencies, asset classes, and other breakdowns. Don't forget to follow performance measures, historical operations, and next events about to happen within your portfolio. They all matter. I can also suggest that you visit your inbox. You'll find there are new recommendations from your RM, Mrs. Jordan. I hope iShares Exponential Technologies ETF will meet your interests when it comes to investing in the new technologies. It would be a great match. For more details, you can always look at the product card with all necessary information about the product itself, as well as an individual commentary from Mrs. Jordan. Just with a few clicks, you can trade the ETF directly in the app. Lastly but not least, we would like to appreciate your loyalty to us. 10 years of being together is a great anniversary. Throughout this time, we granted you with individual investment advice service provided by Mrs. Jordan. You have also leveraged the self-trade features in the app and robo-advisory service. Congratulations. Your services and portfolios are really diverse now, and we are happy to grant you with all of that within one app. John, as a reward of being loyal to us, we are upgrading your customer status to the gold level. Please find dedicated offers, rewards, and coupons which are awaiting for you in the app. It was a pleasure talking to you, John.
It was quite robust example of the personalized video, but you can imagine that such kind of video can be much shorter, address only particular elements and the content I would like to deliver to the customer. Focus only, for example, about information, informing the client about new features available in the application, or information about some reporting elements, I mean, performance of the client portfolios, or just informing the customer that the new investment idea has been delivered to him. But at the end, what's really important are the KPIs, because as you can see here, 85% of users watch personalized video till the very end, compared to the 15% for non-personalized video. So it's really worth to think about such personalized video. Then click-through rate is 2 times higher when compared to the personalized text emailing. Yeah? So when you send the traditional way, when you send the information to the client personalized, but in very traditional way, I mean some text emailing, and then compare that to the sending such kind of personalized video. So as you see, this click-through rate is much higher. And of course, that at the end leads to the higher conversion when the whole sales process is supported by personalized video, which of course in natural way leads to the higher customer lifetime value. So that was the examples I'd like to share with you today, and the key things I would like to remember. Focus on the engaging and the retention. So not only the activities which happens before the client acquiring, but the engaging and the retention. To increase the engaging, please think about the personalized proposition, personalized information delivered to the customer in the very interactive content, also this personalized video. And regarding the retention, the gamification, the loyalty could be quite nice way to increase the customer lifetime, and at the end, the customer lifetime value. So that was everything from my side. Thank you very much. If you would like to hear more about examples, how our company helps, the banks helps the institutions to improve work of relationship managers, to improve interaction between advisors and the customer, please visit website then, and there you can find much more case studies. Thank you once again.
Thank you very much, Sławomir. I have at once one question to you, because we have here in the chat a question from Pavel, which concerns your presentation. If I can get back to your slides very, very quickly. So it was about the figures, relation between retention and profitability. How did you determine these figures? Did you conduct analysis based on the Polish market? I think this was...
No, so that was, of course, the numbers which we have gathered from let's say different sources. So that's rather not our, let's say, analysis. This is not in general something that we as a company done. As you see here, the sources that we take the numbers from are before the screen. So this is something what we found on general market available in the different sources.
Some studies. All right. Okay. Thank you very much. So the next questions to you will be during the Q&A session.
Okay.
Now, Maximilian, welcome. I will. So your presentation is here. I can switch it if you. So the arrows are here in the bottom, but I can do it for you. So yeah, please, you're welcome to start.
Okay, thank you very much. So first of all, sorry for being late. I had technical problems entering the call. So sorry for that. So I will have a quick presentation. I will try to be short so that there is enough time for Q&A afterwards. I think it was very interesting what has been presented so far, and there is a lot of, so to say, very innovative stuff that definitely is interesting for private banks as ours. Perhaps shortly about myself and what we do. So I'm the head of private banking and wealth management at Erste Bank and Erste Group, and we have a portfolio of around 50 billion assets under management in Austria and about 10 billion in Central and Eastern Europe. So we are focusing on private individuals, wealth management customers, as well as institutional customers. And I think customer centricity, of course, is extremely important in the type of business that we are doing, and being very close to what they want and being able to provide very individual solutions that, however, can be scaled. And I will be talking a little bit about that. But perhaps let's start shortly, with the first slide. So to say, what is happening? What do we see overall in the market happening? And there we see that discretionary portfolio management and advisory, so fee-based advice, has gotten traction significantly over the last couple of years, and this is really the way to go also for the future. So also the forecast that we see here go very strongly in a growth direction in discretionary portfolio management, and that is also what we see in our business, and there is a strong focus on discretionary portfolio management, and that has basically two major reasons. Since MiFID has been introduced as a new regulatory environment a couple of years, the classic advisory type of business has become much more complicated. So it needs much more tools, it needs a much more, so to say, infrastructure in the back. And discretionary portfolio management basically gives the customers and the advisors a solution to work very well in that type of environment. Especially, and I will get into that, so to say, if you do it in a manner which is very efficient and where you can manage on a very individual basis a lot of customers. So what does that mean? That means in discretionary portfolio management that you define a strategy with the customer, and then the bank or the asset management entity is taking over the management of the portfolio. Retrocessions, so inducements, which, so to say, was typically a large part of the business as we see here in the past. So that means kickbacks from funds that have been distributed by banks is getting less and less, because it's also not clear whether, from a regulatory perspective, that type of business model will be able to be maintained going forward. So in the UK and in the Nordics, you already have inducement bans, and there's a big discussion in the European Union with respect to inducements. Also from that perspective, one has to develop a business model much more in a, so to say, to a portfolio fee-based advisory, not, so to say, into a product push environment that we had much stronger in the industry in the past. If we go to the next slide.
Yeah, we have here, maybe I will read it at once. We have this slide here, the question, does the fee-based advisory include mostly point of sale advisory or advisory mandates with recurring fees?
So that's the advisory with recurring fees. So the point of sale advisory, as I understand it, as it is being meant here, means that you or both is basically possible, that you pay a fee on the transaction, so that can be advisory fee based, or you can have fees on a recurring basis where you, for example, pay a percentage on the assets under management. The retrocession basically are the kickbacks which comes from the funds or from the products that you are distributing. So that's the difference.
Yeah. Okay, thank you. Go next.
Yeah, and I think we've seen a lot what is possible from a digitization perspective and what has been presented by Sławomir, and it basically allows for massive productivity improvement and also better advice in the whole industry. So developing tools, developing different sorts of advisory is key. So what do we see on the scaled customization part? That is, so to say, discretionary portfolio management, as I will present it in the next couple of slides, so we'll get into that. It goes, so to say, on the advisory side, where at the end of the day, the advisor is giving advice to the customer, but the customer decides at the end of the day which trades to do. However, if you have the right tools in place, you can do that in a scaled up version where you have tools which are looking at your portfolios, at the portfolios of each customer on a daily basis, and gives alerts on what can be done. I think artificial intelligence in the entire banking industry, but also, of course, in the wealth management industry, is going to play a huge role going forward. It will help in, so to say, preparing customer meetings, preparing customer calls. It will help in analyzing, so to say, what is being discussed with customers. It will help with all the administration. It will generate communication proposals. And at the end of the day, there will also be solutions, as there are already right now, where AI helps in making investment decisions overall or in portfolio management. And then you have, so to say, the digitization of rather complex products, which have not been accessible to the masses in the past. And I will talk about private markets a little bit later in more detail, because there we can scale it up in terms of the numbers of customers that we bring in there due to a massive reduction of the minimum entry levels. Robo-advisors are, at the end of the day, often something like digital discretionary portfolio management solutions. So also here, the portfolio management part is being brought down to the masses, and that's a big trend that we can see. Good. Then if we move on to the next slide, we think also due to these technological advancements and due to new processes that are being put in place, we have to rethink strategic asset allocation, because now it is possible to invest also as a private banking or wealth management customer much stronger into private markets. So what we say at Erste Bank is that the classic 60-40, so 60% bonds, 60% stocks and 40% bonds, will be replaced by something like 50-30-20, 50 stocks, 30 bonds, and 20% alternatives, of which 10% something like private markets and 10% diversifier like gold, real estate, etc. So ESG, of course, a very important going forward as well. And we see it, so to say, basically two trends on the ESG side, which are quite interesting. One is that For institutional customers, ESG is really, really important because they have goals to fulfill. They have, so to say, criteria on the ESG side that they are putting into their investment guidelines, etc. And then we have especially the younger crowd, which gets into investment, for whom we see ESG is a very, very important factor. For a lot of people, still, it is not a big factor. Also, that needs to be said. And there is also one problem with ESG that is rather complex. So making it simplified in a way so that it's understandable for the customers and that it reflects what they understand under sustainability, I think is the key going forward, and that's a big task for us as well. Because if you look at it from a regulatory perspective, it's very, very complex. It's hard for the advisors to explain to the customers what exactly, so to say, we're doing there, and it's hard for many customers to utter exactly what they want. Okay, then how do we get to an individual portfolio? And I think here, so to say, it is the key that it is a key that you are able to construct a very individual portfolio for each of the customers, but that you're able to have these mass customizations so that at the end of the day, in the back, it is being done in a manner that can be scaled up and that you can transact with a lot of customers, even though they get very individual portfolios. So how is it done? In a classic advisory discussion, you discuss about the investment goals, the risk tolerance of the customer, the ESG preferences. You explain them the different asset classes that are there, develop the strategic asset allocation depending on the individual requirements that the customer have. And in, so to say, many in many banks, you then get into very standardized solutions where everyone is investing into the same. And I think the key for success, for us at least, was that we can individualize that very much. And this is, if we move on to the next slide, this is what we do in our DPM solutions, that we can explain the customers, so to say, the risk return profiles of different portfolios, and these are only schematics here, and then can construct a portfolio which is very, very individual for each of the customer. So you have on the stock side, and then you construct a strategic asset allocation with stocks, with bonds, with alternatives, and so on and so forth. But you can go in much more detail. So first of all, you know, the percentage of the different asset classes can be anything. So there could also be 72.5% stocks and 10% bonds and whatever, so to say, the other percentages for the other classes. And if we go on the next slide, they can be done, so to say, in a lot of different themes that we have, and a lot of different building blocks, which can be accessed in various different forms. So you can either have them in single ISIN, so that you have your stocks, so to say, all different single stocks, or you can have them in actively managed funds or ETFs. They can be sustainable or not, and it can be variable or fixed, which means that can be changed, the percentages between stocks and bonds. So that gives you a huge optionality for the different customer profiles in constructing a portfolio, and it gives the advisor also the possibility to give real advice and not lead a customer into a very standardized portfolio. However, in the back, so to say, these individual modules are managed centrally, so the whole system is very much scalable. And then if we click on the next slide, so individual portfolio proposal looks like that, and we can, so these are only examples on how that looks like. Also, if we go on the next slide, you get a calculation of the backwards performance of your very, very individual performance, and that gives the customer a lot of trust in what you're doing. So this mass individualization is for us really a great key to success, and we've been growing in discretionary portfolio management with this modular approach by more than 50% over the last 2 years, and it takes up, so to say, now the largest part of our revenues on the securities income side. So that is, so to say, something which makes a lot of sense. Of course, the performance has to be right, and that works out really well to, so to say, all the reasons that I've explained. Now, DPM is one of the key topics, and the second key topic that I wanted to talk about is basically private markets, private equity 2.0, as we call it. So private equity, private markets has been an asset class which was only accessible for institutional investors until quite recently, because minimum tickets varied, of course, from fund to fund, but were often 5 million or 1 million plus. So you had to invest in a single fund, then very large amounts of money. And most of the private customers do not or did not have access to this type of asset class. Now, due to technology, due to also new regulation, and due to, so to say, new products, we have built a platform now where we can bring customers into the private markets asset class, and where we can show them funds and where they can invest funds starting with 50,000 euros. So our minimum size for private banking customers is 500,000 euros in terms of securities volume. And we say that 10%, if you have long-term money, that's very important on the private equity side or on the private market side, because you have to invest your money for quite a long term, should be up to 10%. Then, so to basically any client that we have could invest, so to say, into private equity. We can advise that under MiFID, and we do it in a way which is very simple, because in the past it was like that if you invest into private equity, you have to go through know your customer process with the fund. You have to sign a limited partnership agreement, which has more than 100 pages. You have to sign a subscription agreement, which has around 50 pages. And you need a tax advisor for the taxes around it. So in our solution, it is, so to say, you can start with 50,000 euros. It is being put on your securities account. It is regulated. It is tax transparent. It's so you don't need a tax advisor. It is a very simple solution where you sign a 2-pager and can basically invest into private equity, into direct funds, into fund of funds, into different assets, asset classes within the private markets sphere, in a very convenient manner. And that is something that we get back from our customers is very unique on the one hand side, and is exactly what they want, because there are more and more customers who are looking into these type of solutions, and especially younger ones who are entrepreneurs, often had, so to say, touch points with venture capital funds, with private equity funds, and very, very interested to get into this type of solution. So bringing down investment solutions that have been only accessible for very large customers is a big thing going forward in terms of delivering customer-centric solutions to our customers. Yeah, that's it basically as a short presentation from my side, and very happy, so to say, to take questions and engage in discussion now.
Yeah, thank you very much, Maximilian, for your insightful presentation. Thank you so much. Yes, I invite our attendees, please type your questions in the chat. We will have some extra minutes for them for the Q&A session. My first question will be to both of you, actually. So How do you see it? How do you feel it? And what is the feedback from your customers, Maximilian, and also maybe from the customers of your customers, Sławomir? To what extent private banking customers want to go digital right now? Because I saw somewhere the statistics that 80% of millennials, of course, they want more digital tools for interaction with their wealth manager, and the oldest generation, which is baby boomers, only 30%. And then this phygital, as they call it, approach is coming into place. There's a mix, right, of the physical and digital experience. How do you see it?
So if I can start, so I think digital is extremely important for our customers. I mean, our customers, and that is very typical for private banks in Austria, are on average 68, 69 years old. So they're not the youngest customer segment. At the end of the day, that gives you also a view on, so to say, where the wealth is being distributed in a country like Austria, and where the wealth is. So we have quite a lot of rather old customers. However, there people are very different. So there are a couple of customers who want to talk to their advisor. They don't need anything from a digital perspective, but the majority also of the older customers have their online banking system, which is being called George, at Erste. And they look into it. They want to be able to do everything via George. We have rolled out also remote advisory. That means, so to say, our customers have a bespoke tool which can be used, so to say, for video conferences which are being recorded, where you can upload presentations, where you can upload documents which can be directly signed there. So we can do the whole process digitally. And at the end of the day, so to say, customers get used to various things in their life overall, and when they experience something, so to say, in Amazon or in other products, they want to have it basically everywhere. And I think convenience is the name of the game here, and being able, so to say, to get rid of paperwork and to get rid of, so to say, physical signatures where you have to get to somewhere physically, even if it's only for a signature. All these type of things are in the interest of, I would say, 90% of our customers. So being able to have physical meetings when they wanted, to have remote meetings when they wanted, to be able to sign everything digitally, to be able to have control over their portfolio in a digital manner, be able to trade, I think is all extremely important. And convenience is the name of the game here.
Yeah. Sławomir, would you add something from your experience?
Yeah, I can only add that definitely that trends and that requirements, as Maximilian mentioned, we see in fact, all customers that clients, all banks, institutions that we are cooperating with, and also all potential institutions that we are also discussions, that all of them are asking about digitals, about mobile solutions for the customers, or traditional web portals for the customers. And of course, it doesn't matter even if this is the typical private banking segment, mass affluent retail. Of course, as Maximilian mentioned, this depends on different customers' preferences. The banks are asking about different ways of reaching the clients, or different content to be delivered to the customers. It could be reporting, interactive. It can be any kind of communication, any kind of video collaboration. An example mentioned before. The traditional combined with, of course, traditional way of collaboration with the client. I mean, I have mentioned in my presentation, from one hand, the robo-advisory, so the typical, let's say, digital way of investing in different products, but from the other hand, some kind of hybrid approach in which the client can collaborate with the advisor. So this is some kind of combination of robo-advisory and the personalized advisory. So definitely any kind, interactions. And in general, I would say that the clients, the customers, the end customers would like to have the flexibility to decide how and when receive different information from the bank in the how to collaborate with banks. So definitely this is exactly the how we see such kind of needs and trends in different banks also.
And how do you approaching or confronting the situation that probably in several years, I mean, for sure in several years, the age of the average age will be younger, because we see that, millennials and even generation Z are coming into the market, and especially the ones that are earning their money at the IT sector right now, they are willing to, to go mobile, to have access, as you, Maximilian, mentioned, to private equity funds via their, mobile application. They are afraid to talk to humans, to relationship manager. Yeah, this is a stressful thing for them. How do you approach and how do you confront this? Which new products should appear to actually meet expectations of these new customers?
So I think one interesting observation that we have, there's a lot of young customers who basically don't want to talk to a banker or to a bank, and they don't want to go into a branch, and so to say they do want to do everything by themselves, and they want to have excellent digital services. Very often, when they, sell a company, when they inherit, so to say, a larger amount of money, they want to talk to someone. Yeah. So, and they suddenly have the feeling, okay, now I'm talking about quite a lot of money, so I have to do the right thing now. I'm not trading some cryptos and ETFs, etc. I want to have an expert who's helping me setting up, so to say, my portfolio, and who's helping me also in that type of transition, and helps me think about what is important when I have these types of money. So I believe that will also be relevant in the future. But on the other side, with the large language models and the development of everything since the last year, since the drop of ChatGPT, I think it becomes obvious that humans can talk to computers like they're humans, and computers can talk to humans like they're humans. Yeah. So, and the computers understand the human in the language that they speak. So that opens a completely new horizon of digital advisory, or of, so to say, of virtual advisory, where there is no human involved. I think that is something that we as banks have to develop, and where we as banks have to experiment in what is possible. Of course, we're in a highly regulated environment, and you have to do it, so to say, in a regulatory compliant manner. But I think if you look a couple of years from now, the possibilities that we see are, that there will be a huge change, in my point of view, on what is feasible in terms of digital advisory, purely because now a man can talk to a computer.
Yeah. All right, and to wrap up today's session will be my last question to both of you. So what does it actually mean today to provide modern private banking? What is the strong selling proposition?
Shall I start?
Yes, please, Maximilian.
I think at the end of the day, so to say, you have to deliver an excellent service in the physical as well as the digital world, which is better than, so to say, what customers, or is as convenient as what customers have in other services that they are using, especially on the digital side. Because if you have developments on the digital side, even though if they have nothing to do with banking, the experience that the customers have is then raising to a new height, and that is what they expect then from basically all other industries as well. So I think in the modern world, the customer wants to have a convenient and as easy as possible life with their private bank, and wants to have access to portfolios, to products, asset classes that are very broad and that, so to say, are not only plain vanilla 60/40 portfolios, but that topics like private markets are being accessible to them.
Mm-hmm. Mm-hmm.
I will maybe add what Maximilian mentioned, that the broad universal product was of course one thing, but based on that, of course, selecting the products which will be very personalized, addressed to the client needs, of course, based on the client preferences, based on the client risk appetite. Today we have, of course, the sustainability aspects, which at the end, I believe, which will lead us to very personalized building the offer for the customer. So definitely, I believe this is one thing of this, let's say, modern wealth management which need to be addressed. The second one is, of course, as Maximilian mentioned, combined with any kind of delivering that offer. I mean, different channels for different segments, any kind of remote collaboration depends on the client needs. Personal advisory from one hand, robo-advisory, as I have mentioned earlier, hybrid advisory. If the customer would like to invest by himself, of course, possibility to do it by himself. And the third thing, I remember a few years ago, one thing was, of course, focusing of any kind of advisory for the customers. But the second thing, a few years ago, if I remember, there was a great problem from the financial institutions to serve very, interesting, robust, and from the other hand, easy information about the client portfolio. I mean, the performance, any kind of reporting. Yeah, today is changing every day. So the content, great examples Maximilian presented earlier. The asset allocation, the performance, and so on, and the PDF reports. Of course, this is something what still we are producing, but digital content delivered to the mobile channel, to the general customers channels. I believe this is also still thing which means that the private banks, the wealth management business, when deliver such kind of content, is really modern company.
Great. Thank you very much, Sławomir and Maximilian, for your contribution. Thank you very much, our attendees, for being with us today. Thank you, and see you next time online. Thank you very much.
Thank you very much.
Thank you very much.
Bye-bye.
It was a pleasure. Bye.